So 2 years ago in May 2022, I gave a talk here, and it was titled "Macro Bears Hungry for Golden Lollipop with a Uranium Center." And I put this chart up. It ended there in 2021, and I was saying that the capex, the blue line is the capex in sort of the resource space, and the black line is the capex from the S&P companies in the tech space. And basically, when those start to invert, is the inversion of the cycle, right? The tech cycle's been running, that's going to start to go down, and that blue line's going to start to go up, and that's the shift of a major capex cycle in the market. And so we flash forward 2 years, and you see the black line starting to come down, that cycle is starting to turn, and you see the blue line in the bottom right is starting to go up. So more capex starting to be spent on natural resources and commodities, and less capex starting to be spent on tech, implying an inversion of the cycle, a long-term cycle I'm talking about. So that was 2 years ago. We did get all-time high gold prices, if you hadn't noticed. We are firmly in a uranium bull market, and so the golden lollipop with the uranium center has come to fruition. Last year, I showed you this chart. It said, where are we in the commodity cycle? And I said, you are here, just like those maps in the mall. And this year, it's the same thing. And now we're just here instead of here. You following me? So this is a long-term commodity chart of the CRB commodity index, which houses 19 soft and hard commodities: lean hogs, orange juice, natural gas, gold, etc. And it had they go in cycles, commodity super cycles. You've probably heard that term. The last one ran from the mid-90s, 1994 or so, to the great financial crisis in 2008. And it had ebbs and flows along the way, right? So these trees don't grow to the sky. You get mini cycles inside the overall broad cycle. But nonetheless, the last cycle came to an end in 2020 with the COVID crash, and we've been in a new commodities super cycle since 2020. It took off like a bat out of hell, as you can see. It came at screaming out of 2020, and now it's sort of consolidating, which happened in the dot-com crash as well, which is why you're now here-ish.
Quick break here, guys. Today's episode is brought to you by Coppernico Metals. Now, regular viewers of my channel will be familiar with the entrepreneur behind Coppernico. His name is Ivan Bebek. Now, although a young man in this business, Ivan's already created tremendous value for his shareholders in the past, namely with Caden Resources, which he sold to Agnico Eagle, and Keegan Resources, which became a mine now owned by Galliano Gold. Now, Ivan has surrounded himself with expertise from BHP, Newmont, and VRIC on his board at Coppernico Metals. Check out copernicometals.com. Now back to the interview.
So that's zooming in. That's the same chart as here, just zooming into the past 3 years, right? Bottomed in 2020, commodities started taking off. Inflation was transitory in 2021, if you remember. But nonetheless, all the commodities were running up. In a year or so ago, we had inflation peak at 9%, and that's sort of when the commodities index peaked out as well, right? Because it's those commodity prices that are driving the inflation anyway. That's like the input on the CPI numbers. And it's just been consolidating for the past year or so, essentially. That's the right-hand side of that chart there. As the world tries to figure out all the things that you're hearing these macro people talk about, rates and inflation and growth and recession and China and all that sort of stuff, right? And we'll get into some of it, so we'll figure out where we are in the commodity cycle. This is the same exact slide I put up last year. Not all commodities are going to move at the same direction at the same time, and you still have time to build quality positions. That was true last year. That remains true today. Here's the divergence, and here is not all the commodities moving together in the same way, right? So this is just a 2-month chart. Coffee's up 20%, crude oil's down 15%, right? The CRB, the total CRB index is somewhere in the middle. So we're in the part of the cycle where you have to get good at identifying which of the commodities are diverging higher and which are going to diverge lower and why. This oil down 20% in the past couple of months is a function of slowing global growth, and we'll touch on that in a second as well. So why are these commodities diverging? Why are we getting this commodity pullback? Why is there a lull in the super cycle? Well, it's because of this chart. It's an inverted yield curve, 10s minus 2s, that's been negative for well over a year now. It pretty much ensures that a recession is going to materialize, though it doesn't say necessarily when. You recall everybody was expecting it last year, and then all of a sudden, growth sort of picked up in Q3 after relatively subdued growth in Q1 and Q2. And so this has got everybody sort of screwed up in the head, right? They don't know if the recession is actually going to materialize. But what I would say is that the yield curve is not confused. It's still negative. It's tried to get close to zero once or twice, as you can see on that chart, and it has run away from knocking on that door every single time. What does gold correlate with? I thought it went down when rates and the dollar went up. Here, for the past 6 months, they're all up. Gold's up, dollar up, rates up. Stuff's weird. Takeaway here is that, gold didn't go down as much as it should have gone down in the October-November period when you had the U.S. 10-year running up 30%. I mean, that's not a typical bond move, 30% in 3 months. Come on. And so gold was sniffing that out. It didn't trade as inversely as it typically would, and finished out the year, as we know, at record highs with the dollar regaining strength, at least on the DXY, and the 10-year yield improving as well. So weird times when gold and the dollar and rates can go up commensurately. Nobody talks about gold volatility, so I put a slide up for you. The candles there, GVZ is gold volatility. The orange line is gold. There's no volatility in gold, and that is bullish. Especially the bottom right of that chart there, we've got three-month lows in gold volatility, indicating to me this pullback to 2000 is a time to buy, and gold wants to remain in a bull market. And gold stocks have some catching up to do. This is probably a theme you'll hear a lot here. So gold ran to record highs, up some 67% since 2017. For a large portion of that time, the GDXJ, the VanEck, gold miners ETF, and the GDXJ, the junior portion of that ETF, they kept pace by and large, and did what they do. In 2020, they overshot to the downside. When gold came screaming out of 2020, they overshot to the upside. That's what gold stocks do, right? But yet here we are in 2023 and 2024, and gold at record highs, or at least near them, and these gold stocks not wanting to overshoot yet. That's opportunity in my mind. So opportunity in gold stocks, and everybody wants to know, well, what changes that? What brings the money in? I'm not 100% sure. If I was, I wouldn't be on the stage. I'd be a lot richer, but it's $2,100 gold in my mind, right? It's a firm, round number that's not one that's already been hit. So fresh new highs that bring in, I think, retail and non-resource money into the sector. And I think that happens sometime in the next 18 months. And then I see a lot of gold companies congratulating themselves. So I had this slide in there as well last year, talking about, look how great our stock is. Yes, but, and I was going to put some charts of companies out in the sponsor hall there, but I figured that would be rude, so I didn't, because they most all look like that. They're up for the past, 2 or 3 months, but they're down 30 to 40% over the past year. So lots of opportunity still in the gold space, I would say. I told you at the beginning I invest the entire spectrum, right? Monthly macro, where we're buying things like GDX and Franco-Nevada and large cap stocks, all the way to writing private placement checks into what Rick Rule would call the penny dreadfuls. So a little bit of taste of all of that here at various levels of exposure. And I guess I'll quickly run through it. So we do the whole gamut in gold, at least for sure. Trusted funds like GLD, and we hold a portion of our long-term safe capital in that fund. We own things like GDXJ and the Sprott Uranium ETF, URNM. Those are all in our long-term sort of resource portfolio. Producers and royalty companies, you see triple flag precious metals there. That's TFPM. MP is what used to be Mountain Pass, MP Materials. That's the large rare earth mine in California, now building separation assets in Texas. And then late stage developers, particularly in the uranium sector, I have more names there because they're liquid, they trade well, you can chart them, you can buy in on pullbacks, and you don't have to worry about liquidity because you can get in and out. Uranium Energy Corp, UEC, Denison, DNN, at least in the US. Encore Energy, which I've owned for a while, has done really well. It just came into production in South Texas recently. And then CTGO is on the gold side. That's Contango Ore. They own 30% of a gold project in Alaska that's heading into production with Kinross as the 70% partner. The development side there, Revival Gold is RVG. I've talked about that company for a long time. 6 million ounces of gold in Idaho with past producing infrastructure on site. CRE is Critical Elements Lithium. That's the only fully permitted lithium mine in Canada, currently searching for a financing partner. BRVO is Bravo Mining. That's a PGM gold nickel deposit in Brazil that's very robust, and it's going to get more robust because now they're honing in on some massive sulfides that they've identified in the copper and nickel space. And then last line there is the riskiest, Explorcos and generators. And on the uranium side, I have written checks into and continue to own Sky Harbor, that's SYH. Latitude Uranium is LUR. Aldebaran, I think all these companies are here too. Aldebaran is got a massive Altar gold copper porphyry in Argentina. Strong corporate backing. South 32 invested, Route 1 invested. They got 20 million in the bank, and they just started drilling with 4 rigs. That's a really interesting company. Gladiator is Glad. That's on the Whitehorse Copper Project up in the Yukon, a past producing mine that they're actively drilling. And then Hannon there is a large, a very large, multiple sort of porphyry asset in Peru that they're waiting on permits. That'll probably take a little bit longer to get their permits to drill the asset that they own themselves, but their partnered out project will likely be drilled later this year or early next. So lots of tickers to investigate there, lots of companies to talk to. I think that was my last slide. Hopefully I identified where we are in the commodity cycle.